Hey guys, it's Carter, and in today's video, we are diving in and doing another stock review Monday. So what we're going to do is analyze one of the most popular stocks out there, Tesla, and determine should you buy this company. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe. If you guys have any questions, let me know down in the comments. And if you want to learn more about investing, money management, trading, I do have a course that offers a whole bunch of fantastic videos, tools, quizzes, all that good stuff, and all that is less than a cup of coffee. So make sure you guys click the link down in the description to at least check it out. So guys, let's dive into it. Now, for those of you that don't know what Tesla is, you must be living under a rock, because Tesla is one of the most popular electric car manufacturers in the entire world. And with that, we've seen extreme growth from Tesla over the past 10 years, where the stock has gone from lows here at $17 all the way up to $414 a share. Extreme growth, beating expectations. And with that, anytime a stock goes up that much that quick, what we tend to see is some sort of sell-off eventually. And that's kind of what we've seen. It's gone from about $415 all the way down to $197 a share. Now, with that, the first thing I always like to do is draw out support. Now, I do think there is some heavy support right here at $190. It hit it once, twice, and even down in here, we established a little bit down in here where we did get some buying pressure anytime it fell underneath $200, and we got buying pressure with that. Not to mention, right now it's trading for about a 28 on the RSI. And the RSI is something called the Relative Strength Index. It pretty much determines if a stock is overvalued or undervalued. Anytime this stock falls below a 40 on the RSI, it has a tendency to get some sort of buying pressure shortly after. The last time it fell underneath the 40 was right in here, and we did get that buying pressure there. And not to mention all the way in here where we got some buying pressure there, and then some more right there. So the first thing I always like to do is look at that support. So right now the stock is trading on the support line. Two, look at the RSI lines. And determine is something major going on, inside the company. And the last thing you'll notice is an earnings report. And this is when a company comes out and they release all of the fundamentals and revenue and all that good stuff about the company. And they released it, and they brought in about $21.4 billion, which is so much money, but they actually missed their revenue earnings. A lot of analysts thought they were going to bring in a lot more. And with that being said, the stock went from $220 all the way down to $196 a share before getting bought up again later. So right now, what we see is the stock trading on a support line. We see it undervalued on the RSI line and a missed earnings. Okay. I think right now what we see just in the general market is so much volatility. And what I mean by volatility is right now we have high interest rates. Anytime we have high interest rates, what we're going to see is a slowdown in the economy. And that's kind of what we've seen, right? If we go ahead and we zoom out, you'll notice the general S&P 500 is down about 25%. In any time they increase those rates, what we see is a slowdown because loans become very, very expensive. And what I mean by that, 2 years ago, you could have gotten an auto loan or a mortgage for 2-3%. Now you're looking at 7 to 9% for a loan. So the rates are crazy. So if you're looking to buy a Tesla, maybe right now you're holding off, which will slow the economy down. And that's, I think, one of the major issues we see right now with Tesla is just people aren't spending like they used to. It's a lot easier to spend money when you have a $1,400 stimulus check. And right now we're just seeing a slowdown of that, which is common. The market goes in cycles, and you have to understand that. Okay, the next thing I want to look at is probably the most important thing when analyzing a company. It's called the cash on hand, and what this means is it determines how much cash Tesla has, right? So if they ever go through a hard time, a struggle, you want to make sure they have enough cash on hand and long-term debt so they could easily pay off that long-term debt and continue to grow and invest inside the company. So with that being said, the company has about $21 billion in cash, which is a 31% increase, which is so much money, $21 billion. And they only have about $2 billion in debt. And this is actually a decline, which is good. So the company has way more cash on hand than long-term debt. So if they ever go through a hard time, they could easily pay off this debt and continue to grow, invest inside the company. Now, the next thing here is the revenue here. The revenue is up 55% year over year. So looking at that last earnings, yes, right now we're seeing a struggle in the past quarter, which, hey, a company is going to have struggles, right? Looking at Apple, which is the most popular stock out there, do you think they've ever had a bad earnings report? Absolutely. So right now, I'm not going to get shaken out of a trade or an investment because of one bad earnings. I understand that right now, the market we're in is not the greatest. All right, so the next thing is the price ratios. The price ratios is something called the price to earnings. What this does is it pretty much looks at the price to the earnings report. Anytime this thing is pretty much underneath 100 for the price to earnings, it determines it's undervalued. And right now it's 64, and you'll notice, right, we'll see that major sell-off right there with that. So right now, I think this represents an absolute great time to start investing in Tesla. For me, anytime the stock is underneath $200 a share, it's an automatic buy, right? This is when you guys should be loading up on share size, investing with some sort of confidence because we understand that there's some support here, and do dollar cost averaging, right? Invest on a weekly, monthly basis into the stock. And what that does is if this thing pops up, you have shares to make money. But if it continues to sell off, what you do is you just average down those, those share prices. So once the stock recovers, you make a lot more money, guys. So that is it. I hope you guys enjoy it. For me, this is an absolute buy. We'll see you guys later. Remember to stay happy, guys, stay positive, and I hope you guys have a great rest of your day. Take care.